Rising mortgage rates are dampening the housing market, with 42% of house sellers having to shave more than 5% off the original asking price to achieve a sale. That's according to Zoopla.
Well, let's speak now to Mark Schuffman. Mark's editor of Estate Agent Today. So is that a trend you can confirm, Mark?
Yes, definitely. We've had an environment over the past 3 years since the pandemic where sellers have been able to ask for, crazy prices, essentially, as people have queued up to view properties and to buy. Mortgage finance has been cheap. But in the past year, as inflation has gone up, we've seen interest rates rise. Mortgage rates have gone from around 3% to now above 6%. That's hitting buyer budgets, making it harder for a seller to attract buyers to come and view their properties. So one of the best ways to do it now is to cut prices to get more eyes on your listing.
Many people, their property has been their wealth, their asset. People have got so used to making money through property, haven't they, over the years? It's a shock that is changing. Even a 5% drop in original asking prices is going to hurt for some people.
That's the thing. There's obviously a lot of emotion with people's properties. An Englishman's home is his castle and all that sort of thing. And then when we talk about the house price indexes and whether it's Zoopla or Halifax or the Land Registry, everything shows things are slowing down. But they're all using average prices, and no one's going to say they live in an average property. For everyone, for every seller, they've got the best property on the street. They want to get the best price. The trouble is, people need to be more realistic nowadays. But you need everyone in a transaction to do that, because you could have a seller at one point of a chain say they want something, but then they need to be able to get. So you need a seller. You can have a seller cut their price somewhere in the chain, but then they're going to want the same further up, and it's up to a decent agent to get that done.
So, Mark, what about the market in general? Could you see a property crash?
Well, this is a big debate among property commentators and the press. It depends how you define a crash, because I write a lot about the stock market, and if you're talking about stocks and shares, you need a 20% crash for there to be a stock market crash, for there to be a bear market. So does property need to fall by 20% for there to be a crash? And will it fall by 20%? No, I don't. No one knows. And even if it does fall by 20%, which hopefully it won't, a lot of people will have had big gains from the pandemic. I think house prices went up about 20% over the past 3 years. So your property may come down since last year, but a lot of people should have gains from the previous years anyway. So it's about balancing those views.
Yeah, and of course, everybody knows there aren't enough homes. There is a huge shortage, so there's a great deal of pent-up demand. So there will always be kind of inflationary prices just due to that alone.
Yes, I think the issue of supply is always going to be there. We do need to build more homes. We need more social housing so that people who may not fit the rental sector but push into it have more options, and that will free up places in the private rental sector, and that should then hopefully mean the purchase market becomes a bit more solid as well. And then, sellers need to be more realistic. We need agents to not overprice, and we just need everyone in the chain to be talking to each other so that we've got a market that moves.
Absolutely.
One of the most stressful things you go through in life, either buying or selling a property. Mark Schuffman is the editor of Estate Agent Today. Thanks, Mark. Appreciate it.
Thank you.